to NatRevMD, a podcast where we share tips on optimizing medical billing and improving practice efficiency so you can have the business of your dreams. I'm your host, Dr. Heather Signorelli, founder of NatRevMD. Let's get started. Hey guys, welcome back to another week. Doctors spend a decade learning medicine, but almost no time learning how to protect what we've built, right? It could be one lawsuit, it could be one tax mistake, one missed plan, and years of work can disappear. We all think, okay, I'll deal with it later, but when does later come? So that's why today I've invited Omar Morillo, a certified financial planner who helps physicians and entrepreneurs protect their assets, save on taxes, and plan for the future. He works with high earners every single day, and he's going to break down some of those most commonly overlooked things. Again, I have no financial ties to Omar. This is purely just an education and recommending a service that is amazing. So let's welcome Omar to the show. Omar, give me a rundown. Tell us a little bit about you.
Sure. Heather, thank you so much for having me on. I appreciate the fact that you are doing something that's meaningful for professionals that are in such a honorable field as medicine is. And I'm happy to be here with you. So I'm a certified financial planner, and I am the founder of Imperio Wealth Advisors. Our firm is housed under Mariner, and that umbrella of a multi-billion-dollar firm gives us access to advanced resources for our clients to be able to help them provide tools and solutions to some of the problems that you mentioned, the tax planning, the asset protection, the retirement planning that's a little bit outside the box of what's usual. And so, again, I'm happy to be here with you today.
Awesome. I'm excited to pick your brain because, for me, myself personally, right, I spent 13 years going to school after high school, and you get out there, you're practicing. You've now, a lot of times our listeners have learned to run a business. They've learned to figure out how to mix patient care with business. But I'm going to tell you the idea of taxes and estate planning, all of that just gets me very confused. So I want to start, with the simple stuff. Let's talk about corporate structure and setting up the business structure well. Can you share just a little bit about how that can be done well, or the mistakes that you commonly see people making?
Sure, Heather. So what we're accustomed to seeing when we're working with individuals in the medical profession is a lack of structure that leads to cohesiveness and simplicity. And what I mean by that is, rather than having, for instance, if you own the building in your medical practice that you operate your medical practice out of, then the ideal thing would be to have an entity own that asset. Mm-hmm. And then your operating entity, which is the medical practice, would be under another entity, another LLC. So the idea would be to compartmentalize liability. Because when you don't compartmentalize liability, a liability event on one end can bleed into the other, and that can expose your assets to frivolous lawsuits and to creditors and predators. People sometimes professionals shy away from doing these things because they think it's going to create complexity. To a degree, it does, but not if you structure it correctly. So typically what we're used to recommending is having those sell LLCs and then having those cash flows flow up to a holding company. And the holding company then files one single return. So if you have 5-7 entities, doesn't mean you have to file 5 to 7 corporate returns. Instead, you can have everything flowing up to a holding company that files a consolidated return for your entire org structure. And then from an asset protection standpoint, how much do you want people out there to be able to find out about you by doing a simple Google search? Are your assets easily findable by someone who may have nefarious purposes? And if the answer is yes, then what jurisdictions and what structures would lend themselves to provide you more of a shroud of privacy? And so that's why where you incorporate matters, where your holding company is formed matters. The kind of operating agreements that run or dictate the mechanisms under which your operations function is very important. And then beyond that, from an asset protection / estate planning side, how much of your assets are held in trust? Are those shares of that holding company that owns everything underneath it held inside of a trust? Is that trust revocable? Is it irrevocable? What are the pros and cons of that? So we help navigate the plethora of options that medical professionals and those who are in high liability professions beyond just medicine explore what are their best options to protect that which they've worked so hard to build.
So say I'm a physician who owns a medical practice. Maybe I also own either professional or not related to my medical practice real estate. Say I also have, I don't know, a cooking business on the side. I like to sell cookies on the side. I'm making this up. But so then all of those, you help navigate which ones need to have LLCs, how to organize and structure those, roll those up into a holding company. And is that holding company a corporation, or is that holding company typically another LLC?
So these are all good questions.
And maybe it
They,
depends, and that's okay.
and the answer is it depends, right?
Yeah.
Because we want to collaborate. We want to collaborate with your legal and tax advisors on ensuring that whatever recommendations we're making on one end, such as for asset protection purposes and compartmentalization of liability, doesn't upend something that they're also doing on the other side from a tax benefit standpoint
Got it.
or from a legacy planning standpoint. So assuming that we all come together and agree on a path of action that best fits your needs, then that's what we're going to be recommending.
Got it. So
Does
you
that
get
make
together.
sense?
Yeah. So we got the tax folks, we've got your team, and we work together so that we're avoiding, double taxation things. I mean, I know with corporations, depending on how you set it up, it can get confusing. I'm not going to say anything further because I'm probably butchering it, but you either way will help individuals sit down, go through those pros and cons, look at the different types of businesses they may run or different sorts of investments that they have, and then kind of help package a plan together, and then work through determining trust. So you guys handle trusts as well.
Yes, we
Okay,
do.
great.
And just to give you an example, since you said you used the term double taxation. So let's say the holding company, if I were to say it's a C corporation, then the red flag goes up. It's a C corp. Oh my God, double taxation. Yeah, but what if your advisors, what if your tax, your CPA and you had coordinated doing things under a C corp shelter because you're planning to sell your business in a certain time frame and you want to take full advantage of the QSBS exemption, the qualified small business stock, right? So again, there are nuances. I will tell you that 8 times out of 10, we're probably just going to look at a pass-through entity like an S corp or an LLC that files as an S corp.
Right.
But there are occasions in which there is merit in using something like a C corp, despite the drawback of the double taxation, because maybe the bite of the apple further down the line is better and
Yes.
makes it worthwhile.
I had just learned about that actually within the last week and a half, about that ability to open up a C Corp or move your company into a C Corp to delay, or I shouldn't say delay, to change how it's taxed if you were to sell that company. So your team
Yes,
handles all of that, evaluation and managing, working again with the tax individual to decide, okay, if we do the calculations on net profit and taxation and in the keeping it as an LLC, maybe taxed as an S corp versus a C corp, and then deciding, okay, if your plan is to sell in 10 years, what would that sell look like? And then what's the tax savings to do that? Because it's a 5-year holding period from a
that is
C corp.
correct.
Okay.
That is correct. You can't decide I'm going to sell my business next year, so I'm going to convert it to a C corp now. It's a
Right.
5 year
5-year waiting
uh,
period.
of waiting. That's
Okay.
true. No, you got
Interesting.
it. You hit the nail on the head.
Well, it is funny. I don't even know. I think I actually heard that on another podcast. I don't know if you're familiar with My First Million.
Not familiar.
Sean Perry and Sam Parr. Anyway, if you haven't heard it, I highly, they're really great guys to listen to, but they talk a lot about business stuff, and they have a lot of guests on there that talk about random businesses. But anyway, really good podcast. Okay, getting us back on track here. You help evaluate, make some plans, package it together, work with the tax folks. Great. What I really want to hear about, and what was very interesting, was you talked about pension plans. I thought pensions went away, when my parents decided to retire. So talk to me about just what's out there for physicians and how they could potentially utilize setting these up as another way to shelter income.
Sure. So let's talk about the retirement vehicle that everyone knows, which is the 401k. Both Ks and pensions fall under the same federal regulation, which is called ERISA. Now, they function by different mechanisms. But let's just say you have a physician who's generating income to a tune of 7 figures a year. And the question is, if they're looking for ways to plan for retirement, but at the same time get some tax advantage benefits, does 23,500, which is the limit for 2025, does a contribution into a retirement plan of $23,500 really move the needle for someone in that position, especially when they're not in sunny Florida, they're maybe in sunny California or
Yeah.
cold New York, right? And then they're facing tax brackets at like 50% when you factor in federal and state. Then that's when it starts making sense to consider something more robust, more custom tailored to their needs. And that's when pension plans can be tapped on to be able to allow for much larger contributions. So I just give you an example of 23,500. If somebody's over 50 in a 401k, the most they can put away is about $30,000. In a pension plan, based on actuarial calculation, we've worked with physicians that have gone and formed plans that they're able to contribute 250, 300, $400,000 a year. So it's
Wow.
a very robust plan. And when you think about that from a tax benefit standpoint, every dollar that you don't take as distributions, you're simply shifting from one pocket, right, from your business checking account over to your retirement account. And that's giving you a dollar per dollar deduction. And if you're in a state that has high taxes, then you could be looking at something as high as 50 cents on every dollar that you put into that plan as being a reduction of your tax bill. So if you owed $500,000 in taxes and you put away $300,000 into your pension plan, that means that in that scenario, for example, you would be reducing that $500,000 bill by $150,000. So now
That's a
you pay
huge amount.
$350 to the IRS, right? So it's in other words, it's giving you the opportunity to deploy capital that would have otherwise gone to taxes, instead keeping it working for you in your retirement.
Wow, interesting. And then, I mean, I know you can do a solo 401k and an employer match. So, can you do an employee match, okay, a solo 401k type employer match, plus on top of that, a pension plan? Or can you do
That
all
is
three?
that is correct. That is
Okay.
absolutely correct. So because they fall under different curtains, right? So
Hmm.
1K with a safe harbor match and maybe even a profit sharing component, they all fall under the umbrella of what's considered defined contribution plans. And that is perfectly legal and compliant to have a defined benefit plan, which is what a pension or cash balance plan would be, running alongside that. And in many cases, when we're dealing with medical groups or we're dealing with law offices that have a large number of rank and file employees, it makes a lot of sense to have that defined contribution plan, that traditional 401k, because having those 401k contributions and those matches and whatever profit sharing component there is usually serves as a gateway to allow the owners of the practice to be able to maximize their contributions on their pension.
Gosh. Okay. Had no idea. That's amazing. I certainly don't have that much to pull out every month, but I think if you're telling me I'm already paying it in taxes, right? So it's being spent regardless, right? Like it's gone. But if we're redistributing a portion of that away from that bucket and put it into a different bucket, that to me seems like a no brainer.
Yeah, and the beauty of it is, depending on the state you're in, I know in Florida it's the case, and in many other states as well, the assets that are in these plans, when we're setting them up, the retirement plan, whether it's defined contribution or defined benefit plan, there's a trust being set up, a retirement plan trust. And it has its own EIN, it has its own entity, and therefore it's not considered part of the practice, which gives it asset protection as well. So there's an asset protection component to this entire play. Not only are you shielding a portion of your income from taxes, but you're also shielding it from creditors and predators that may want to sue you.
Thank you. Okay, really great. And so the last thing I do want to talk about, because this is something that we did late in life. I have two children, and it's figuring out the estate planning piece, because I think this all goes into a continuum, right? You could come into your office and go, okay, here's the business side, here's the money side, and here's the personal side. So talk to me a little bit about how your team, what mistakes you see or what things people could be doing better when it comes to estate planning. And if you do have children, making sure that you figured out how to organize things in case something happens.
You know, Heather, it is one of the most sought after services by people that gets most often put off.
Yeah.
I can't tell you how many times we've had um, been introduced, been referred to high caliber professionals running wonderful businesses. They dot their I's, they cross their T's, they know how everything runs in their business. And then I asked them one question, and the members of my team have been trained to ask the same question, and that is, if last month you and your spouse went to dinner and God forbid didn't make it home, who gets the kids? It's like finding a deer before, in front of headlights most of the time when I ask that question, because most of the times they don't know the answer. So number one is on the estate plan is actually having one, right? And which is so fairly common for people not to have one. And I understand why. It's because the conversation is uncomfortable. I mean, look, Heather, you don't want to sit here and talk to me
Mm-mm.
about dying, right? Nobody wants to talk about it, even though it's a fact of life that everyone at some point.
Or God forbid,
It's
I actually have to figure out who's going to take care of my children. I've got two sets of grandparents that are both still alive. So,
right,
you know,
right, right. So then the question is, right? Do you want to leave something prearranged, or you want them to dog it out in court, and it gets nasty, right?
totally 100%. And you don't want that. You want it to be settled. And whether that's asset protection or managing children or ours and all that stuff, again, it's uncomfortable. But the last thing you want is a loved one to not have the information if something were to happen. And so it's one of those things I think we just gotta have. And you probably make it a little bit easier though. It's not like this awkward conversation. You probably have this whole process. I can imagine knowing how you've presented yourself today.
Well, Heather, look, I think there's two sides of that coin, right? Because people look at the estate planning and they immediately think death. And don't get me wrong, yes, there's
Totally.
that death planning and all that stuff, but there's the what if you live side.
Yeah.
And people are like, what? What does that mean? It's like, well, yeah, what happens if you're just incapacitated and you're just sidelined for 90, 180, 365 days? You're just sidelined. The bills don't stop coming. The payroll doesn't stop in your business, right? So what things are in place to ensure that, hey, you're going to make a comeback at some point, but that the entire framework of everything you've built is not completely derailed because you were sidelined. So that's when we talk about documents in the estate plan that are geared towards that. Having a medical directive, for instance, so that your loved ones can direct your care according to your wishes, right? Especially if you're not able to communicate your wishes, that's very important. Having a financial power of attorney that allows someone to step in and write the checks, pay the invoices, pay the payroll, deal with the merchants, pay the light bill in your house. Just the little things that we don't think about that without us would fall apart. Those instruments, the financial power of attorney, the healthcare directives, can be crucial to helping keep things on track. And then when you get back to action, you jump back into your old role. But at least in the meantime, things didn't completely fall apart just because you had a human moment.
Yeah. And again, these are things that I think were not taught, at least in healthcare, maybe not in a lot of different professions. And I think it's so easy to get wrapped up in school and residency and fellowship and, oh, now I'm seeing patients and then I've started this business. And you put all this stuff off to the side. You're like, I will deal with that next year. I'll deal with that next year. But it seems like you guys have a pretty good process around, bringing people in, figuring out what they need, and making it easy. Or at least that's what I would hope.
Yeah, and that's what we strive to do. We can only move as fast and as efficiently as a client wants. So in many cases, right? Like, so I have a doctor. I'll give an example. I have a doctor in Texas. Hey, we need to do estate planning. Okay, great. Let's do it. Right. Here's the information we need because I can't make the decisions for you.
No,
You and your wife need to sit down and decide who gets the kids. You and
yeah,
your wife need to decide who
I
gets
cannot do
what
that
goes
for you.
where. I can't do that for you, right? So there are things that I can't do. Long story short is that process took about 7 months because 2 months after we had the conversation, there was a medical diagnosis on the doctor himself. Long story short, he's better now, and now we're back on track to doing things. But I can only work as fast and as diligently as the doctors allow for us to do.
Yeah.
That being said, when we get someone that's highly motivated and they really want to be engaged in the process, we're highly efficient. We make it very simple and we coordinate with all the other advisors, the attorneys, the accounting and tax professionals as well, to ensure that the planning that we're doing is in unison with the strategies that they've already considered or are considering deploying for the clients as well.
And say you have an estate plan, or say you have some LLC, say you have half of what you're talking about today, but you don't have the other half. Can folks bring a half-baked plan, we're going to call it that, a half-baked plan to you, and you helped kind of finish it up and work to kind of make it complete? Because these are things, we did our estate planning 5 years ago. A lot's changed in 5 years. And so can you help navigate, where folks need to be using current information?
Yeah, absolutely. That's a very good question, Heather. And the answer is yes. We can, to borrow your analogy, we can whip up a custom batter to
Great.
help finish baking that cake
Perfect.
and just help you get to where you're supposed to be.
Perfect. Because, I think, folks do kind of start to figure out parts and pieces and then maybe trail off or kind of need to refresh things. So that's great.
It's one of the funniest things that I've noticed in the over a decade I've been in this field, and it's that sometimes folks put more time into planning their vacation
Mm-hmm.
than these things, and these are the things that can really jump up and bite you, but they're not necessarily for some reason the priority. Is my car going to have the leather seat color that I want? Like, you put more thought into that, right? More energy into that. So that being said, I think that it's important to prioritize these things. And I just want to commend you again for creating a space where these discussions.
Oh, thank you. No, we've had a lot of fun doing the podcast. We've been doing more guest speakers lately, and it's just been really great to have different people on here who are experts in their field share things, because again, at the end of the day, the intent is that in healthcare or any field, right? We're only given the tools that we're given during school. And so we've got to add in all those other pieces throughout life. And business is not easy. Entrepreneurship, as you know, can be lonely. And so the more folks you can get in together that can say, okay, I can solve this problem for you. I can't solve that one, but I can solve this one. I think the better we're all going to be. So I appreciate you being on. I do want to ask, where can folks find you? Where can folks set up a meeting to kind of go over what's going on with them and see if you're the right fit?
Sure. So we have our website. It's imperiowealthadvisors.com. That is IMPERIOWA.com. We also have a Facebook page. We have a LinkedIn page, and we have a YouTube channel too, where we put out content with a regular cadence on different financial topics. So if anyone just wants information, they can go to our YouTube channel, Imperio Wealth Advisors, at YouTube. And alternatively, in our website, they can also sign up for our newsletter, where we frequently address many of these topics, and also topics around the economy, investment management, etc.
Okay, awesome. I will put all of those in the show notes and direct folks to the YouTube channel, the website, all the things. So thank you so much. Thanks so much for being here this week. This was a great episode where we talked about some of those right structure things that you can shield your assets, how pension plans work, right? I didn't even know that this was really an option for us, and just ways that you could save a lot of money on taxes. And then, of course, the thing that we oftentimes put off as estate planning, and how that can protect your family and really help you figure out, okay, I've got to do these things. How do I get them done? And who is someone that can help me do that? So check it out. Check out Omar's website at imperialwealthadvisors.com. And the link is in the show notes. All right. Talk to you guys next week.